Hey, welcome back. It's Nolan Mathias, and today we are discussing on this 5-Minute Friday Toronto's housing values and the fact that they're nearing $1 million for the first time. And I'm going to talk about what you need to know about buying in a hot market. But before we get into it, do me that favor, hit that subscribe button, hit that notification button, please hit that like button so more people like you can see this video. And don't forget about our race to 10,000 subscribers, where we are going to make one lucky subscriber's monthly mortgage or rent payment just for being a subscriber to this channel. It's free, it's easy, and it's definitely worth it. So go ahead, hit that subscribe button. Definitive guide on how to manage your credit, product, and elite price in that order. It's never been more important to get your mortgage right. Okay, so let's get into it. Let's discuss Toronto's real estate values and the fact that they're nearing $1 million. Yes, that is Vancouver pricing for the Toronto market, and it is getting very, very near from an average purchase price perspective to that $1 million mark. It is at $9,677,885 to be exact. The benchmark price is slightly lower than that. Remember from our last video on the National Housing Market Update, the benchmark price is for a specific type of property so that you can see what's happening when you measure values from a consistent property type perspective. Average housing prices is basically all of the prices combined for the market in that month, divided by the number of sales, and that gives you your average home price. Average home prices can obviously be inflated or deflated by a number of high value sales or a number of low value sales. And for the purposes of this video and the conversation, because Toronto Real Estate Board tends to use average price as their benchmark number, and the media therefore does the same, we are using average housing prices for the purposes of our conversation. So nearing $1 million, and I got off the phone with a buddy of mine, Matt McKillen, amazing mortgage broker out in Toronto. He was telling me yesterday about the craziness in the market. People buying $1 million properties, people listing them and saying, hey, we're going to list them today, and you got to wait till next Monday to write an offer, and trying to build basically a bidding war. And then this thing that I'd never heard of until yesterday, which is a bully offer, where instead of waiting until Monday to present your offer, you go into the seller and you say, hey, we're going to write you an offer right now, $500,000 over list price, and you need to accept it by 11 p.m. We're not going to do the bidding war thing on Monday. So absolutely interesting market that's happening out in Toronto. And that means that a lot of people are having to write conditionless offers. So in other words, no financing condition, no home inspection condition, which means you have to be a lot more careful. You have to be really confident that you're going to get fully approved on your mortgage. And it's not something that we typically recommend. We understand that it's a part of the market out there, but you definitely need to make sure that you're getting all your I's dotted and your T's crossed when it comes to that purchase agreement and when it comes to your pre-approvals. Now, if we go ahead and we take a look at the values, the question is this a thing that's here to stay? And what typically happens in a market where things are really crazy is you end up seeing big run-ups in prices, bidding wars, all of those things. It lasts a year to 18 months, and then you see the market start to correct. And how you figure out whether or not the market's going to correct is you look at seller and buyer sentiment, and you basically look at whether people are still continuing to believe that housing prices are going to go up. And what I like to use for that is Nanos Research. They have a series of data that they use, but the one that I like is the future value of real estate data. And basically what they do is they survey 250 Canadians every single week, and over the course of a month that equals 1,000 Canadians, and they ask them what they think is going to happen in certain parts of the economy. In this case, we're looking at their real estate numbers, and as you can see, if you look back to May of 2020, people weren't that confident that real estate values were going to increase. Well, you look at where they're at now, and people are definitely confident that real estate values are going to increase. So this Toronto market and the increase in prices is here to stay, at least for the short term. And when I say short term, I mean 6 to 12 months. So you need to expect that you are going to continue to pay higher and higher prices if you are waiting to get into the market. Now the question is, do you wait and do you hope that the market falls and hopefully get a better value down the road? Well, I want to caution you, and I want to make sure that you're careful if you think that waiting a year or two and getting into the market later is a good strategy, because there are a lot of people talking about this in 2018, especially in the Toronto real estate market, waiting for the market to come down. I mean, there's one guy on the internet who's been talking about the real estate market in Toronto collapsing for the last 15 years. He's still waiting. He's also still using a picture from 15 years ago. And, it becomes this conversation around, do you really want to wait and then risk having to wait into your further into your retirement until such time as your house is paid off. So think about it this way: is if you were to buy today and you're a 30-year-old, you're probably going to have your house paid off by 25 if you do get some good mortgage planning advice. Or sorry, you're probably going to have your mortgage paid off by 55. If you get some good mortgage planning advice, you're probably going to have it paid off by 50. Now, if you wait 2 or 3 or 4 years for housing prices to come down, now you're looking at 55 to 60. And you're basically extending when you get to be mortgage free further into the future. And the other thing that you need to realize about waiting for housing prices to fall is that you may be waiting for housing prices to fall, and you may actually miss out on an opportunity to purchase a property for cheaper than what you could buy it for a year or two down the road, because we don't know where in this cycle we are purchasing, right? We could be purchasing at the bottom of the run-up, we could be purchasing at the middle of the run-up, or we could be purchasing at the very top of the run-up. We don't know. And there's a good chance that if you were to buy a property today, so at this bottom green line, that you will never see prices come back down to where they are right now. And if you are purchasing at the top, you may be paying a little bit more than you would a year or two down the road. However, the one thing I want to point out, and the one thing that people forget, is the long-term picture, because here's what it looks like 25 years down the road. You see those 4 green lines that were in the last screen? Well, those 4 green lines 25 years down the road are just a blip on the radar. It literally doesn't matter whether you bought at the bottom or the top of the market if you're buying for the long term and planning on living in the property. Now, if you're speculating and you're just trying to make a quick buck, whether you bought at the bottom or whether you bought at the top of the market really matters. But if you're buying a property to live in long term, and you know that you're going to be in the housing market for the next 25 years, it doesn't matter whether you're at the bottom or the top. Even if values crash by 50% 25 years from now, you're still going to be better off than if you hadn't bought at all, because guess what? You're going to have a property that is completely paid off versus the alternative, which is renting for 25 years, and then you've got basically a property that you're living in that you paid $1 million mortgage off on and no equity of your own. So I think you really need to keep this in mind. And if you keep in mind that you're buying for the long term and that interest rates are the lowest that you will likely see in your lifetime, and that also factors into how much you pay long term for over the life of your mortgage, well, make the buying decision not based on what you think is going to happen in the market and speculation, but make it based on what your needs are and what your housing needs are, and also from the perspective of if you can qualify now and you know that you can purchase a house now, that at least you can do that versus waiting and having prices go up past the point of where you can afford them. So that's the conversation that we're having today with respect to housing prices, where they're going, the real estate market being where it is in Toronto. I firmly believe that with interest rates as low as they are, yes, $1 million seems like it's a big number. However, when you look at affordability, when you look at the payments, when you look at the actual cost of owning the home, it's not that much different than it was 2 or 3 years ago. And that's primarily because interest rates are low and payment costs are down. And at the end of the day, being in the real estate market is something that long-term always pays off. And as long as you know that you're buying a house that you can afford, as long as you know you've got some savings and the ability to weather a crash or weather a poor economy, then you are definitely making a good decision by getting into the market, rather than waiting and hoping that housing prices one day will come down to where you think they are affordable. So that's 5 Minute Friday. I hope you enjoyed it. Do me that favor, hit that subscribe button, hit that like button, and please, please, please don't forget about our race to 10,000 subscribers. Somebody's going to win their monthly mortgage payment or their monthly rent payment. And if you're in Toronto, I'm reckoning that's a pretty good thing right now. We'll see you on the next video. Cheers.